Welcome to the Traders Market Intelligence Report brought to you by WealthBuildersHQ.com. My name is Robert Roy, and this update is for Monday, the 9th of October, 2023. Hope you're having a great day. Hope it was a good trading day for you. The market really did respond well. I am stoked at what happened today. We'll see if it's able to keep it up. Let's go ahead and rock on. So when we look at the S&P today, man, oh man, did unemployment represent. Boy, they stepped up to the plate, didn't hit a home run. They got a touchdown, a field goal. I mean, they just crushed it today. They couldn't do anything wrong. We went from one fib line to the next. We blew right through that, through the next, and we hit massive obstacles along the way today. First fib line, 8 moving average, next fib line, and we did amazing. Now, we still have a few minutes left in the market, wrapping up here today, but if you look overall, we're up 59 points right now. There's still about 13, 14 minutes left until the market closes. What a great move. Where does it put us? What does it mean? Okay. Good numbers. And it isn't much of a difference. I mean, when you look at the numbers, look at what the actual unemployment was versus what was the expected, right? The actual on the unemployment rate was 3.8%. It was expected 3.7, okay? And the previous was 3.8. So we hit right where we were, okay? I mean, we forecasted average hourly earnings month over month. 0.3 was the forecast. So 0.1, I mean, that's all the difference was on the numbers to drive the market this way. Listen, I'll take whatever it is to push it up, but I want you to make sure that you are in position number one in the chair. You're back here and you're checking this out for what it is. Because if you look at this and say, man, it's going up, I'm jumping in, and you know what? Maybe it does. But I do not have enough proof, enough signals yet that that is what's happening. Right above our head, you see a small little horizontal blue line. What is that? Well, we had a lower high, and then yet a lower high. Lower low, lower low, okay? So overall, actually, we had a low in there as well. Right? We should have one right there. We had a low right there as well. So low, lower low, lower low. So we've got up to the 43.1687. We're just barely above that right now. We may or may not hold by the end of the day. Again, there's about 12 minutes left until we close up. But right above that is the 43.33 even, which was the high that we put in on, let's see what that is. That is on the 29th of September was our high there, okay? So we've got to get up through that. We've got our 21 moving average right above our head. I need to close above both of those. That then at least gets me out of bearish type territory. Right now we're in a bearish neutral bias. If I get up above the 43.33, but not above the 21, the green line, I'm still in a bearish neutral bias, and it's still hard for me to say, all right, let's start stepping our way into bullish. Close above the 21, the green line. Now we can start taking small positions because we will still be in a neutral bias. We have not turned bullish, and we were not anywhere near a true bullish bias yet. We're all of the moving averages are in the right order, which they are right now for bearish. Okay, so we're not there yet. So we've got to get above that. So right now we're looking at the 43.33. We are looking at the 43.4050, which is the 21. And we're looking at the 43.67 on the upside. If we fail, pullback is not a bad thing, right? After a day like today, 60 points, pullback is not a bad thing. Where do we fail to? If we fail to the 8 and bounce, awesome, a lot of strength. Fell down to the 42.76 and bounce, awesome. We break that, now we start to show some weakness, and 4 days in a row, including today, we played around with that 42.1680 level. So are we going to be able to sustain that level or not? That really is what the key to it all is. When we look at VIX, fear, that sucker is down big time. Big time, right? We're down $1.15. We got back into the low zone. We're a low medium, and everything about fear is looking great. It all is going to come down to what the big picture turns into for the S&P 500. Now, if we go out and look at different time frames, this is the part that's going to, make you think. All right, we've got a nice bounce going on today, but this candle is the last week, right? It's Friday. This is Monday through Friday. We're on the higher end of it, which is great, but we're still in a bearish territory. If we go ahead, actually, that was weekly. This is monthly. So for the month, we're up. Big deal. We're up a little bit, right? Overall, we've had a couple of bearish months in a row. Last month was the worst, right? Overall, this was our trend was in here. We broke, and this just became an equidistant trend line in there. So we have 2 major months that we had bearish moves. Last month was really bad. We're still outside of that realm there right now. Okay, and that really is going to, make the difference as to where it all comes together. So keep your eye on the markets. Be very diligent. Make sure you focus on the correct positions in your chair. If you are not at a point ready to trade, be back in position 1, or consider that it is position 1. You're backed away from the computer and you're watching the big picture. Move up into a closer position, position 2 in the chair, as you see things start getting better. Right? We start pressing up and we're hitting into that 43.33 line. We start to break above and we're tapping on the 21 moving average. Now I'm in position number 2. We break the 21. I'm in position 1 in the chair. I'm leaning forward. My hands are on the keyboard and I'm ready to rock. You have a great day and I will see you all at our next update. Bye for now.